Good Friday morning, everybody. This is Joe Cusick, Vice President of Wealth and Asset Management from Trading Block and MoneyBlock.com with your traders exclusive for this Friday. Well, here comes another serious gap today, but it's in the Bulls' favor today. We're looking at like we're in full-on rally mode with the S&Ps right off of their best levels that we've seen all morning. We really want to take a look at some critical sectors to see if this is going to continue or if this is just a big bounce after being severely oversold. We especially want to watch consumer stocks like consumer discretionaries, transports, and we want to see that transports, especially railroads that have just been beat up, continue to move. We want that small cap leadership and technology and financials. We need them to pick up off of this base that they look like they're trying to establish right now. This appears really right now, though, in my humble opinion, that this is nothing more than a short-term bounce off of very oversold levels. I say this for two reasons. There is some serious overhead resistance, specifically looking at the 20-day estimated moving averages on all of the sectors that I talked about, as well as the major averages like the S&Ps, the NASDAQ, and the Russell 2000. They need to challenge that and actually get some movement through that 20-day estimated moving average. If they don't, that is going to be severe resistance, and then you could see that the selling resumes. My expectation is that there will be a challenge up there, especially going into next week. Next week historically has been, when you look at the cycles, has been a bullish week when you look back at past performance. But again, past performance does not indicate future performance. So we're going to keep an eye on that. Couple other things that you want to look at. Watch the crude markets. Right now, the crude markets are pricing in roughly around a $3.50 to $4 range. There's really about less than a 30% probability of being over 34 in the next 20 or so days or below 28. So we're going to look like there could be some potential range area. We're over that psychological $30 level at 31 on the crude contract. You also want to keep an eye on volatility, and specifically the VIX. The VIX has been trading up above that psychological 20 level. It's actually been at that 23 level, at 24 level, 25 level, and we're seeing it sustain there. You want to watch today closely to see if the VIX closes below 23 and challenges that 20 level. If it challenges but doesn't break, I'm not completely convinced that the bulls are starting to take control. As a matter of fact, I think that until the VIX gets over 40 and has a print at the end of the day over 40, I don't think you can say that there's been capitulation by the bulls at this juncture, and that there could be some further pressure by the bears. Well, that's it for today's Traders Exclusive. This is Joe Cusick, Vice President of Wealth and Asset Management from MoneyBlock and TradingBlock.com, wishing you a great weekend, and we'll talk to you next week.